Hi, good morning, everyone, and welcome to another episode. The 43rd episode of Let's Talk About Market. As you all are aware, we had discussed about the 61.8% retracement level, which was at 25,120, I had mentioned that why that important is level. Why important that level is. So if you see, yesterday was the expiry. The Nifty tried to break above that, but could not sustain above that. If you see daily swing, it seems to be falling. So, what does it indicate? Is this pullback over and are we going to fall? Or, you know, is this just a routine correction and are we headed higher? These are all the questions that, we need to answer. And, let's look at some of the setups and how things are playing out. Maybe, that can give us some clarity, or are there any place to hide in the short term or in the medium term? So, let's look at all those things. Let me quickly share my screen. Please let me know once you all are able to see my screen and you all are able to hear me properly. Then please let me know in the comment box. I am right. So are you all able to see my screen or hear me properly? Please put in a comment. Okay, great. Thanks for the confirmation. So yeah, let's look at the Nifty index first and let's see what the structure is telling us. So when you look at the Nifty index, we had spoken about this yesterday, that 61.8% retracement will be important. And you can see over here, the Nifty index did try to break above that, but could not sustain above it. And in fact, if you see it in terms of candlestick pattern, those who see, it sort of formed a shooting star pattern yesterday. So, that makes this high of 25,220 an important level on the upside. So broadly, in the near term, 25,120 to 25,220 becomes an important resistance level in the near term. And until this does not break on the upside, there is a possibility of some correction or consolidation. Also, when you look at the hourly chart, what has happened is there has been an RMI crossover on the downside, okay, over here. And since then, we are seeing some sort of consolidation also happening. So is this, a small flat sort of pattern that is developing, or will it translate into deeper correction? We need to check. But at least over here, first important support level is 20 R. Whether it takes support over there and rises higher, or does it complete the cycle and then turns up? That is something that we need to watch out for. But at this point of time, maybe being a little more patient will work for us. That is also because if you see the daily swing, I had pointed out very clearly, a couple of days back, that the daily swing had almost come to the 80 level, and the Nifty index had not crossed the 61.8% retracement level. So there was a case of some bit of correction or consolidation. And in fact, if you see the call minus put histogram, which also gives us an indication of a very near term short tops and bottom. So as I told, it is very, very near term, maybe just 1 to 3 days. It might be only relevant for that. So even that was pointing out towards that, and we are seeing some sort of consolidation. So now, as I mentioned, as this correction or consolidation, whatever you call it, it should ideally not break the 40-hour exponential average, which so far is at 24,980. Okay, if this breaks on the downside, then there can be some concerns that can start cropping up. And the reason why I'm saying this is because when you also look at, say, the dollar index, this, of course, we don't have it on strike, but over here there is this falling trend line which is probably breaking on the upside. So can that lead to can there be a risk of this rising higher and maybe some risk of move in equity market? So this is an important an open-ended question. Even I am not sure. But when I was also looking at the Nifty sectors, I am honestly getting a little bit of mixed picture. So let me also try and convey that, what I'm thinking. But yes, broadly for Nifty index, 20R and 40R will be important downside levels. And the next, better setup that we can get is when the RMI, goes back to the zero line and then gives, sort of a bullish crossover. In this case, what may happen is that there might be a healthy correction for this up move, and then it might signal of next bigger up move that can follow. So in case of bullish scenario, that will be the case. But if 40R breaks, then we have to be open for a retracement of this pullback and then see basically how the overall setup is. Okay. But as of now, just to conclude, 20R, 40R becomes important level to watch out for. If 40R also breaks, then the risk of this being a very important bottom, I mean, that may not necessarily hold true. And then we'll have to check the patterns very closely what is happening. Now, once you see Bank Nifty index also, and you remember I have mentioned this earlier as well, right? See, this in terms of price action, ideally this is a good breakout point that has that the Bank Nifty has seen. Now, ideally this breakout point should not, I mean, Bank Nifty should not go down below this breakout point and sustain below that. If that happens, then this will open up the risk. Okay. So, worst case scenario can be the 40R exponential average. But if the Bank Nifty, starts trading below the 40R exponential average, then, some worries might even, crop up. Now, so yes, so Bank Nifty is the one that I'm watching very closely. And other thing, which I think is starting to look up is actually Nifty IT. Okay, we had spoken about this briefly in the past 2 to 3 days, because one important thing is that this important support level was held. I mean, the Nifty IT index broke above it, and now it seems to be sustaining above it as well. So that is there is some encouraging sign in Nifty IT. And also, right now, what is happening is that it is taking resistance around the key daily averages. But once it starts sustaining above this key daily averages, then that's where the idea would be that it might probably rise higher towards this high, and at some point break this lower top lower bottom formation, which it has been forming for quite some time now. Okay. uh, as I mentioned, I mean, see, Bank Nifty index, what is happening is that there was a breakout. Now there is a pullback that is happening. Now we need to see whether that breakout sustains or no. And more importantly, like I mentioned, even if, say, the breakout zone does not hold, okay, which means, so let me just highlight the breakout zone along with the levels. Okay. So the lower end of this breakout zone is 55 835. Okay. Some might also end up saying, okay, why not consider this trend line, this falling trend line as the breakout point? Okay. All those things are valid. So worst case scenario will be this gap zone. So gap zone is at 55,177. Okay. So let me just type it over here. 55,177. Sorry, that is the low. It is 55,616. Sorry, my bad. 55,616. Ideally, this level on the downside should not break at any cost. Okay, because if that breaks on the downside, then the risk might start appearing that are we going to go for a deeper correction and so on. And in fact, if you see the 40R also, it is at 55 700 or so. So yes, broadly, this appears to be a very, very important support zone in the near term. So need to watch very closely what it is doing over there. Now, few days back, if you'll remember, I had spoken about few setups. So say, for example, Nifty Auto, it was looking like a pullback has happened and now it is trying to inch higher. But unfortunately, as you can see, we are not seeing that good follow through that is happening. And in fact, over here, if you see, there's almost at an important support level. Okay. If this breaks on the downside, it might look like there was an decline, pullback, and now again the decline is happening. In which case, basically on the daily chart, all these averages will become very important to watch out for. Okay. So yes, Nifty Auto, there is a little bit of weakness that seems to be appearing now. The other one was Nifty Metal. Okay. Over here also, what is happening is that while this up move had happened, we did not see a bullish crossover, and now there is a divergence that is at play. So these are all very near term thing that I'm saying, where all this is indicating that there can be a little bit of correction, consolidation, or whatever you call it. But there are early signs of warning that we are seeing right now. Now, whether this short-term reversal does it translate into a deeper correction in the medium term? I mean, these are very difficult to answer at this point of time. Maybe Nifty might end up giving us some bit of confirmation. But yes, over here, we have to be open to the idea that maybe this up move is over, and can it go for a slightly more deeper correction or consolidation? And in that process, will the RMI go back to the zero, and only then it starts only then it starts making a new move? So these are all open-ended questions that we need to see on a day-to-day basis and figure out. Even PSU banks, if you see over here also, there is this classic divergence that we are seeing, and there is a bearish crossover that we are seeing. Now, because it is a bearish crossover, you won't be worried until the 20-day does not break. But 20-day itself is another 1.5% away, 1 or 2% away from the current levels. So that's where we have to be open for that. And also, when you look at the hourly chart, it is on the verge of breaking the 40-hour and sustaining below that. So as I had mentioned, there are some cracks that are visible. The only thing over here is Nifty IT, and I think from tomorrow onwards, we'll start getting the IT results as well. So if that becomes supportive, so maybe on the index level, we might not feel the heat, but beneath the surface, a lot of things are happening. Okay. So for all you guys who don't know, at the top, if you hover over here, go to calendar, you will end up seeing the result season. So which are the stocks that are going to give their results? That is what you will be able to see over here. So you can see over here, TCS is the one that is going to announce its result tomorrow, along with Tata Elxsi as well. And then there are some other small cap companies that are going to announce their result. So this is something that we need to keep in mind. And as I mentioned, there are some cracks that are visible in the market. Also, if you see, ideally now, the best thing that can happen is that probably we end up seeing some sort of correction. And in that process, in that correction or consolidation, whatever you call it, once the swing, average swing, once the daily swing comes back to 20 or 10, maybe that's where a good opportunity can crop up. But of course, we need to see how things go, because all the other indicators that you see, as I mentioned, swing is the one that is very, very fast. Okay, that will help you to time the things more accurately and more quickly. So see, if you were a weekly option trader and so on, you would not go all out over here. Okay, in fact, you will be cautious. But yeah, using a combination of indicators that I have mentioned, which is call minus put, daily swing, average swing, that can really help you to fine tune your extreme short term timings, and you might also want to trail your reversals level to a very tight level, such that your profits are also protected. So yeah, that's where we stand over here. In fact, if we see the other indicators like average swing, it is somewhere in the middle over here, not concluding anything. Diffusion indicator mein, if you see the percentage of stock about 20, over there also we are seeing some dip, and it is somewhere in the middle. Percentage of stocks with RMI buy, that was also in oversold zone, but it has now come up. So this again indicates that we are not in that oversold or extra bearish sentiments anymore. This pullback has helped to get rid of all those oversold readings. So over here, we probably now have to be neutral and focus more on price action and see whether are we seeing any signs of a reversal or no. Okay. So as I mentioned to you, on the Nifty index, 20R is an important level on the downside. Okay. Your 20R is an important level. It is almost over there, and as we speak, there is a minor break below the 20 R average as well. So in this case, the downside possibility up to 24,980 also opens up. And in fact, if you remember, yesterday we had looked at the option chain and we mentioned that the range it was showing was 25,100 to 25,200. If you see the range of the Nifty yesterday, it was exactly that. Okay, and the expiry happened somewhere around this 25,120 level or so. So yeah, I mean, it gives you a fair idea. So let's look at what the option chain is also suggesting us. So option chain is telling us that 25,200 on the upside and 25,000 on the downside. This can be the specific range for the coming expiry. And if I click on combined OI, so all those people who don't know combined OI is nothing but summing up of all the possible expiries on the Nifty indices. I usually have this habit of looking at combined OI. So combined OI tells that 25,000 is a very, very significant support level on the downside. Ideally, this should not break, and 25,000 also in the future is somewhere where the 40R exponential averages on the daily, I mean on the spot chart. So it might go slightly below that if 25,000 has to get tested in the futures. But yeah, broadly, I mean, this is what we are seeing over here. Okay, so keep an eye for this range in the near term, and let me also see what the max pain trend is telling us. Okay, yesterday it was at 25,150, and you saw that the expiry was very much closer to that if we look at the synthetic futures. And now see, in this decline, we are seeing some dip in the max pain area. So again, hinting us that the call writers, who were confident that 25,150 will be an important support level, I mean, they are possibly shifting downwards. So yes, I mean, we need to see this trend, what it does over here for the max pain level also. Okay. And lastly, there was some bit of short covering by FIIs in yesterday's trading session. Finally, okay, you can see over here that it was almost around 197. From there, we have seen some 7,000-8,000 contracts that has got covered. So when we look at the internal details, you will see that largely it was short covering. I mean, there was a very, very minor long change. It was as good as unchanged, but mainly short covering had happened yesterday. So now, the next bout of short covering can only happen, as I had mentioned, that once the Nifty index breaks and it starts sustaining above the 61.8% retracement level. Okay, once it happens over here, I mean, that's where I'll be a lot more confident in mentioning that a short covering rally should come. But as of now, this looks like a very range bound sideways sort of market, and we'll probably have to live with this sort of scenario sideways movement. Okay, so that's what I have for today to discuss. Mainly, it is more or less a range-bound market where we had come to an important support resistance level. Unfortunately, that resistance level is not broken on the upside yet. So, in the near term, you can see some correction or consolidation. So we need to be prepared for that. And as I had mentioned, what are the things that you need to watch out for a turnaround, right? So for a turnaround, you need to see on the hourly RMI, almost going back to the zero line and then turning around. I mean, that is where, you might have some indication that this corrective phase is possibly getting complete, and maybe, we can head higher for the next leg of move. But if, as I mentioned, 40-hour breaks on the downside and the Nifty sustains below that, then it might not be a good picture at that point of time. So, the bullish bets that should be toned down significantly and wait for the market reversal to happen, rather than anticipating a turnaround. So with that, if you'll have any questions, we can probably take it up. And yeah, I can try and address if there are any, conceptual questions that you all have, or anything you would want me to help you all with on strike. And also, just one reminder, on Sunday, we will be having, on Saturday, we will be having a webinar on strike valuation setup. So strike valuation setup will actually cater to both short term and medium term, because and in fact long term as well. The only thing is that the time horizon that we need to change. I mean, from 1 year, so we have 1 year to max time frame, right? So for very short term traders, basically, just give me a moment. I'll pause the notification. Yeah. So just for, I mean, for short term trader, 1 hour would be 1 year would be useful for strike valuation setup. For medium term, 3 to 5 years will be helpful, and for the long term investor, 10 to max will be important. So that way I try and cater to everyone's need and how they can actually use strike valuation setup to enhance their trading and find more high probability setups. So the attempt would be that. So please do join us on Saturday. We'll let you know the timings. Most likely it should be morning 10 a.m. But nevertheless, we'll let you know the timings. Okay. And watch out for our social media handles as well. We will be posting over there the timings and everything. Okay. So I'll wait for some time. If you'll have any questions, do let me know. Else we'll have to wind up the session. So Shishir, please, we don't want to get to discuss on stock analysis and so on. But if you'll have any conceptual thing to ask, please let me know. Because the intention is not to give recommendation, but it's to learn the process, how to think about it. Any questions, please let me know. I'll wait for another minute. If at all I don't see any questions, we might have to end the session. It's been more than 2 months now with high short position. Is that possible? Has it been this long? No, Mahesh. So to be very honest, I mean, the data is front of you. We haven't seen such a, I mean, short sustaining for this long. I mean, this one might ask this question that are we changing the range? Is there a range shift happening and so on? I mean, for that, we might need to have many more touch points for that range. I mean, so far, even if I think of a range shift, probably this might be the range which I would be looking at, right? So over here also we are towards the bottom end of the range. And see, sometimes what happens is that absolute numbers can be misleading, or it can, you know, it can misguide us. So that's where long percentage also is very important. Okay, but over here you can see even long percentage, the ratio is very bad. I mean, it is towards the extreme oversold zone. And even in the history, this is probably for the first time that we have seen a level of, I think, 5.98, and it is still sustaining at the lower level. So even if I assume that there is a range shift that is happening in everything, I would always look at it with respect to the long percentage as well. And long percentage also tells us that, there is extreme pessimism over here. So typically these indicators tend to act as a contra indicator. And at some point of time, we might end up seeing this sideways consolidation breaking on the upside. But when will it be? I mean, the the best answer that I could give is probably once we start breaking and sustaining above this trend line. Until then, this consolidation can continue, and we have to be mindful of that. So, just to give you the context, I have explained this many times earlier as well. These are all indicators. Okay, this can give you a hint of something, but you will always need price action to confirm that. Okay, when indicator is saying something else, price action is saying something else. Typically there is a big move that is buring around, and we need to be watchful of that. So it is probably at this point of time we are seeing some divergence in the price and the indicator, and that's where one of the two has to sort out, which means that either the index will fall, and this might probably remain as it is, and then in the hindsight you will be able to justify why they were shorts. Or what may end up happening is that this range will break on the upside, and you will end up seeing a short covering. Now, which one of that happens? I mean, that is something that we are watching and tracking on a day-to-day basis, and even discussing about it. So yeah, I mean, that is what I can say. Okay, so I've got many questions now. In a market one day, a one down, very select stocks having good trades, most mid caps. What to be the strategy? Which attributes to? So DVC, in such cases, it is very clear that you might, I mean, don't wait for big trending moves and so on. Wait for, I mean, look for short-term setups. Look for swing and average swing. I mean, try to play those 400, 500 point kind of moves, because those are the ones that we are getting cleaner one. And in stocks, if you want to see, probably focus more on the hourly and the daily signals, because that might be the one that could be working right now for at least till the time we don't get trending move. Once we start getting the trending move, then look out for the weekly setups or even monthly setups. But as of now, the focus would be to probably look for hourly daily setups, and where is it that some move is happening. Because if you try to play way too big moves, that is not happening, because as you mentioned, one day up, one day down, we are not seeing those follow throughs happening. So yeah, guide with what features strike. Huh. So in this, basically, as I mentioned, you can look out for RMI scanners on hourly, daily. You can also look out for the Dow trend scanners on daily, weekly. Then you can look out for the technical scanners. Where is it that the hourly, they are crossing below 20 or crossing about 20 and so on. I mean, these are all those indicators that will help you, find where the Bollinger Bands are getting narrower and now they are starting to widen. All this will again give you some insights, or it will at least give you some hint of what are the probable trends that we are seeing in the market. And apart from that, you can also look at the strike OI insights and see which are the stocks which are near support, near resistance level. I mean, those are the ones that can help you, give some clue of, where we can see the movement in the market. NCT, thanks for accepting. Yeah, no, welcome. And in fact, after you mentioned that, we realized that we have not done webinar on, strike valuation setup for a long time. So I thought that this would be a good opportunity to, talk about the strike valuation setup. Can we see the underperforming and outperforming sectors on strike? So yes, NCT, you can do that. One is through RRG. Okay. So one thing that you will be able to see, you will be able to see this through RRG. So everything on the left hand side are the ones that are underperforming and not doing that great, and the ones that are on the right hand side are the ones that are outperforming and doing well. Now, I assume that you're a medium to long term investor. So for that, maybe looking at weekly RRG might make more sense. So you can get some hint of which sectors are going to do well, or where is it that you can end up seeing some movement and so on. I mean, this RRG graph will help you to easily spot it. Now, there are a lot more finer nuances that I have discussed in the past many sessions about the importance of momentum and RS, and why turning around, turnaround in momentum, which is on the y-axis, which means something like this, why that is important and so on. These are all the things that I have discussed in the webinar. So in case you all have not seen the webinar, you can just go to our YouTube channel, type Strike Money. Okay, go to our channel, type over here RRG. We have done a lot of webinars on RRG. Okay, so this was just 3 weeks back when I had done this RRG webinar as well. So you can check this video. So don't get worried by 2 hours webinar or so on. It is usually the first half an hour, 45 minutes, where I try to explain things conceptually. Rest are all Q&A. Okay, so at least if you watch for first 30-45 minutes, you will get a fair idea about what the conceptual thing is. And it has been discussed with many other live example as well, so that it can help you understand. So yeah, NCT, that is one. The other one is through heat map. Okay, you can also use this. So this is not just to identify strong and weak stocks, but also for also to find the indices. It is very, very helpful. Just to give you a context. Now, say for example, Nifty index has been in this sideways correction or consolidation mode for quite some time now, right? So let us take one example. So you can see, more or less we are around this zone only, right? Which was there on 15th of May. Okay. So just go to the heat map, NSE indices. Okay. In custom date, click on 15th May and check it till current date. Okay. So the ones, so you can see over here, Nifty PSU, Nifty Auto, Nifty Metal, Nifty MNC. These are all the ones that are outperformers. So anything which is above the Nifty 50 index, these are all outperformers. And the ones which are below Nifty 50, these are all underperformers. Okay. So that's how, quickly within one glance, you will be able to see it in the heat map. So as I mentioned, use custom date, or in fact, even if you want to see in rolling 1 month, which are the outperformers, underperformers, and so on, within a click, you will be able to see the performance and quickly judge which are the index that are doing good, Now, say for example, in 1 week, IT is doing good. So I simply click on IT and see which are the ones within IT that are doing good. So this can help me to, quickly understand which is where, which are the stocks which are outperforming, underperforming, and so on. Uh, Sanket says, hello Jay, since monthly and weekly RMI has not turned bullish and the Nifty is in the range for now, can this be a very long consolidation correction before we end up seeing a significant uptrend? So yes, Sanket, you are bang on. We had discussed about this, right? So see, right now, the thing why we are a little more bullish is because, see, every time when the RMI comes to the buy on the daily chart, okay, we don't necessarily think of a big correction and so on, okay. But say for example, if this up move has happened, some significant levels are not broken on the upside, or it has come back towards the breakout zone, then we start worrying because, see, it's like, when there is a bearish crossover, you be prepared for the worst, okay. And when there is a bullish crossover, try to find where is it that, the bullish opportunities can occur, and wait for it till the price action says that it turns around. Okay, so now say for example, if the Nifty index sees a correction towards this level, okay, and over here assume that even the daily averages are broken, 61.8% is broken, and by then the RMI goes and gives us a sell crossover, then we will be open to this idea that this can be an HNS worst case, and over here we can fall towards these level also. But the point is that be mindful of what is happening on the higher time frame. So I think we have discussed this earlier as well. And as you mentioned, that on higher time frame on the monthly chart, the RMI cycle is still not complete. Even on the weekly chart, the RMI cycle is still not complete, and we have still not seen a bullish crossover. So we are mindful of those facts, and all this, bullishness out of me will fade away once the Nifty index, starts sustaining below or breaks 61.8% retracement level over here. Okay, if that happens, then I'll be very worried. In fact, the breaking of 40-hour exponential average itself will start making me worried. But additional worry will start occurring when the 61.8% breaks on the downside. So the broader idea is that, when things are not that bad, okay, especially when the daily chart is telling us that things can rise higher, and we could see that from momentum swing and many other indicators which had come to the oversold. Okay, so when we are in that oversold and extreme zone, you think of a very bullish, you think of a bullish outcome, and you try to play that. And while you're playing the bullish outcome, be mindful of the levels that you have to watch on the upside. Okay, because whether it is a bounce or an up move, we cannot know right at the start, right? But all we can do is that participate and see whether they are turning around at an important point or not. So say for example, Nifty index is finding resistance at 61.8% retracement. So I'll be bothered over here. Okay. Had it crossed 61.8 and it was sustaining above it, I wouldn't have been bothered about weekly and monthly also, because then I would think that it might continue to extend on the 20-week or 20-month, and it will keep continuing to rise higher. Okay. So that is what we have at this point of time. So, watch out for the levels is what I would say. But keep in mind that the weekly and the monthly are also in sell. So if the reversal sign occurs on the downside where 61.8% breaks on the downside, then be very, very careful, and be even open for the idea that 24,450 or even 24,000 sort of levels can come into play. That is how at least we think about it. Some people say that how can you flip so fast. The thing is that we are always mindful and aware about what is the broader picture. Okay, and then we try to time it on the lower time frame. That is what we ideally need to do, right? So that is how we approach it. And if at all, the reversal occurs, or are we going to get into big consolidation? And if we see those signs, definitely I'll be communicating over here. At this point of time, there are risks that are there, but not that greater risk at this point of time, at least. I mean, that is what the price action is telling us. So yeah, I think it's 11:40 now. I can't see any more comments. So let's wind up for the day. With those thoughts of watching the 40-hour exponential average, which was at 24,980 sort of levels. Watch out for that level, and let's see where the market is headed going forward. So thanks once again, and let's catch up tomorrow and see if we get any some decisive insights or no.